the end of the day, the ones that invested, they were like, thank you so much. They were like, nobody else has ever presented this opportunity to me.
Mm,
And that's the part that after closing has really got me pumped up about this business, because I was in the same boat. I'm 49 years old now, so I was 47 when I got involved with this, and I've been in two nice, equity golf clubs, and um, I've met a lot of great people and wealthy people. Not once did anybody approach me about getting into a private placement multifamily deal until
mm,
I got involved in this multifamily group. So for me, taking money out of the stock market and investing it in these deals is much safer to me, and is a much better way for me to try to build my wealth. So I feel like I've learned a little bit later than, when I talk to some people in their 20s and 30s that are wanting to get into this, I'm like, I wish I was you, because over time you really could build a ton of wealth through real estate.
mhm,
But I know now, and so I want to tell other people, and I want to give other people the opportunity. And that's all it is an opportunity. You can listen to the opportunity and say, you know what, it's not for me. I'll just keep all my money in the stock market. But over the last 6 months, when we've had those, sudden movements in the stock market, I didn't look at my phone and look at all my ticker symbols and see that, dropped by 15% and start getting worried. A lot of my money I've pulled out and put into multifamily deals, and you don't have a ticker symbol,
mhm.
so the biggest risk is, for the sponsorship group to manage the asset properly and just don't lose the asset.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Darin Batchelder. Darin is a multifamily syndicator and founder of TZK Properties. Darin has an extensive background wearing many hats as a CPA, software sales executive to capital markets and loan trading. Darin, thank you so much for joining us on the show. And how are you?
Hey, Dwaine, I appreciate you having me on.
Absolutely. So I understand you're out into the Texas, is it Dallas market?
That's right. I'm actually originally an East Coast guy. I'm originally from Connecticut, a small town called Brookfield, Connecticut, near Danbury.
Okay. Yeah.
And I grew up there, went to school, University of Rhode Island, and then I ended up in South Florida for 14 years. And now I'm in North Dallas for the last 10 years.
Oh, beautiful.
Yeah.
So if you don't mind kind of going a little bit deeper into your background and maybe talking about how you got started in real estate all the way up to, your syndication business.
Sure. Starting out right out of school, I started out as a CPA with Price Waterhouse. I did a stint with PepsiCo within their domestic and their international audit divisions. And then from there, I transitioned. I wanted to get into sales. So from the accounting role, I moved into sales, software sales for a few ERP systems. And then from there, around the time of the dot-com bubble bursting, I ended up transitioning into institutional trading. Went to work for ABN AMRO, which is a Dutch bank. I don't know where they are now, but at the time, this was like 2002 to 2006. They were a top 20 worldwide bank. And I was on their mortgage capital markets trading desk. And we were responsible for selling the origination that they were originating. So ABN AMRO was a top 5 residential jumbo originator, and we were reselling those loan portfolios to other banks to supplement their own origination. And while I was there, they ended up buying a bank called LaSalle Commercial Bank out of Chicago, and they had a large multifamily portfolio. So we started selling a lot of multifamily portfolios direct to other banks as well. So I learned the asset class, a long time ago. And then around the time of 2007, when the market was turning, I left and I started my own company, trading loan portfolios. Still have that company. Don't deal with the end consumer at all. It's all bank to bank loan portfolio trading, and it's residential, multifamily, and commercial real estate. And about 2 years ago, I had some extra time. The business was running well, and it afforded me some free time. And I started to get committed to, I wanted to get into the real estate game. But I didn't want to do the single family flip business. And so I wanted to go larger. I didn't know how to do that. So I went looking for a group, and I ended up finding a local mentorship group in the Dallas area, run by Brad Sumrock. I joined that group in December of 2017, and I've been running full tilt since. So in my first year, I invested passively 7 deals with other people. One of them I was a key principal on, and then at the end of 2018, I closed on my first deal as a sponsor.
Wow, that's pretty quick transition there. I mean, of course, you had the background and the loan portfolio sales and trading, and then kind of went over to the syndication side. So now on the syndication side, like, how does it, kind of feel like it's kind of a different business for you, or is it kind of similar as far as kind of mechanics?
No, it's a completely different business. It's a completely different business. So we closed December 2018, first quarter this year. I had never, owned an apartment complex with a group of people before. And so as the lead, I wanted to really be on site and get an understanding of how to manage the property. So first quarter, I didn't look at any new additional deals. I just kind of focused on the operations and, learned a ton. Each step along the way, you learn a ton.
Oh, yeah.
And then since like April, I've been out looking at new deals, and it's a competitive market, and gotten close on a number, but, just waiting for the next one to fall.
Nice. So before we kind of talk about that specific deal, would you kind of talk a little bit about kind of what is your specific criteria looking for as far as market wise?
Sure. So as a lead sponsor, I wanted to be within like an hour and a half drive of where I live. So I live 45 minutes north of Dallas in a town called Prosper, which is just north of Frisco. And so anywhere in the Dallas-Fort Worth metroplex, I'm looking at. A lot of brokers, being new, they tried to kind of pull me out to some of the sub-markets, tertiary markets. But one of the things that really attracts me to the Dallas-Fort Worth area is, I've lived up in New England, I've lived in South Florida, I've done business with a lot of banks in California. One thing that's very attractive about this Dallas market, living here for 10 years, is that it's extremely affordable. When you look at the major metropolitan markets across the country, your cost of living here is just substantially better than most major metropolitan markets. Now, there's been a huge run up in apartment prices. When I got in the end of 2017, I would talk to sponsors that were nervous about the market because they were buying at $20,000, $30,000 a door. And, we purchased at $80,000 a door.
Wow.
And so they were nervous, and they were, didn't want to be in the market. They kind of were taking a break. From my standpoint, I look at it relative to other major metropolitan markets, and the cost of living for rent and also for housing, even though they both have run up, is still substantially better than most other areas in the country. Are we going to see a slowdown at some point? Absolutely. But I think that we're in a very good place in Dallas because I think more and more people will continue to migrate to Dallas, even in a downturn. Even, if we have a downturn, we could see people moving from Chicago and from California and from East Coast to Dallas because it's more affordable and because more and more jobs are coming this way. So that is really the attractiveness to me with multifamily in this market, is job growth and income growth.
Absolutely. So can you kind of break down like the first deal that you sponsored, kind of like how'd you structure it, how many units, how much money did you raise and stuff like that?
Sure. It was just over $6 million purchase, um, 76 units, and we raised about $2.5 million for that. And we got a Freddie Mac small balance non-recourse loan for just over like 71% of the loan value of the purchase price. And what else did you want to know about the deal?
So how did you guys end up finding it? Was it through a broker or do you have another
Yeah,
connection?
yeah. So it was from a broker with Marcus and Millchap. Gentleman's name was Trey Caldwell. He's one of the brokers here in the Dallas Fort Worth area. And you know, to your listeners, some advice I would give learning along the way is don't wait to start developing those relationships with brokers. The brokers are the critical component in winning a lot of these deals.
Mm-hmm.
In Dallas, there's probably 6-8 groups of brokers that control probably 80% of the market. And so at first I took a kind of approach, well, I don't want to bother the broker unless I've underwritten the deal and I know I'm going to put an offer in and I can compete on the deal. But the story with this deal was I actually went and met with this broker on another deal. I was trying to win that deal as a deal in South Dallas. And it was the first time I had met the broker, but we hit it off. We just got along well, and I liked him. I think he liked me, but I ended up becoming runner-up. Somebody outbid me by like $300,000, and he actually called me up and said, "Hey, you need to take a look at this other property I have, and it's in this town called Crowley, about 15-20 minutes south of Fort Worth." And so I went and looked at it, and after looking at it, I ended up telling him, "Hey, I'm going to pass." He called me up 3 days later and he said, "Darin, you have to meet me at the property." And I asked him why. He gave me a few bullet points on why I should go out and meet him. So I said, "Okay, I'll make the drive out there. It's about an hour and 15 minutes from my house." And I'm glad I did. So
What
when
a
I got
convincing
there,
broker, huh?
yeah, the big moral to this story was, had I not gone out and chased that other deal in South Dallas and developed a relationship with that broker, he never would have made that phone call to me.
Mm-hmm.
Right. So I would have looked at the OM on that property because I still would have seen the property. It was a listed deal. I most likely would have driven the property. Just like I did, but I would have passed. Nobody would have known any different. Right. But by him convincing me to go out there was the difference. So by being out there, he showed me the interiors, and I saw that they had larger ceilings and they were very dated, but I could see that, hey, if we remodeled the interiors, this could really be a nice property. At that point, that wasn't the end game. It was, okay, now I have to go out and look at comps and see how far I can take rents and that sort of thing. But I was going to pass on the deal, so
Mm-hmm.
if he hadn't called me and convinced me, then, I give him a lot of credit and for that. And so for your listeners, you're trying to get your first deal or even your second deal, it's, leveraging the broker relationships are critical.
That's key. Yeah, that's great advice. Thank you so much for that. You had mentioned that it had needs some renovations, updates and stuff. What kind of budget you guys were looking for? What type of changes did you guys do?
Yeah. So in the Dallas market, a lot of these properties have turned over 2, 3, 4 times with different groups. So a lot of the deals that come to market, one group may have purchased it and rehabbed the whole exterior, but they left the interior units available for the next buying group,
Mm-hmm.
or they may have only upgraded 30% of the interiors and they've left. This property was unusual because it was a California investor that owned the property for over 10, 15 years, and he just didn't reinvest money back into the property. So his rents accordingly were below market. And so the property really needed both an external rehab and an internal rehab. When we took over the property in December, I first started focusing on the internal, and then we started getting rent bumps from there. And actually, we just started the external rehab this week.
Mm. As far as like kind of all those moving parts, I know you was kind of being the sponsor, working with investors and doing a whole bunch of different stuff. How was that process like for you?
There's, I guess I would categorize it in two different phases. One, attracting new investors to invest in the deal, and then, the relationship with investors after you take over the deal. So prior, once you're awarded the deal, you get it under contract, then you have 60 days approximately to get the deal closed and get the financing, raise the money from limited partners. And we end up having 44 limited partners in the deal.
Mm.
And, I would say that about half the limited partners came from the multifamily group that I'm a part of. So, getting into this multifamily group, about once a month we get together, people fly in from all over the country and get to know each other. And so I got a large network of people across the country that want to invest in multifamily deals. And then the other half were investors that either myself or my partner on the deal had a relationship outside of the group, just from personal contacts. And we presented the opportunity, and they ended up investing in the deal as well. So those two different investors kind of looked at things differently. So the ones that are in the multifamily group that have experience investing in multifamily deals, they're like, hey, Darin, I like you. I like the deal, but I can only invest in one deal this quarter based on the capital I have, and I've got 5 deals in my inbox. So it's you don't have to sell those people on why multifamily is a good asset class, the returns, that sort of. It's more why us as the lead sponsors, why our deal, and versus the other 4 that they have in their inbox. And so it's kind of relative value on the transaction. The ones that were outside of the multifamily group, a lot of my contacts, they were like, hey, Darin, I trust you, and I know you've been in that space for a long time on the loan trading side. Help me understand how this works. Help me understand the risk profile. Help me understand the returns. And then at the end of the day, the ones that invested, they were like, thank you so much. They were like, nobody else has ever presented this opportunity to me.
Mm.
And that's the part that after closing has really got me pumped up about this business, because I was in the same boat. I'm 49 years old now, so I was 47 when I got involved with this. And I've been in 2 nice, equity golf clubs, and I've met a lot of great people and wealthy people. Not once did anybody approach me about getting into a private placement multifamily deal until I got involved in this multifamily group. So for me, taking money out of the stock market and investing it in these deals is much safer to me, and is a much better way for me to try to build my wealth. So I feel like I've learned a little bit later than, when I talk to some people in their 20s and 30s that are wanting to get into this, I'm like, I wish I was you, because over time you really could build a ton of wealth through real estate.
Mm-hmm.
But I know now, and so I want to tell other people, and I want to give other people the opportunity. And that's all it is an opportunity. You can listen to the opportunity and say, you know what, it's not for me. I'll just keep all my money in the stock market. But over the last 6 months, when we've had those, sudden movements in the stock market, I didn't look at my phone and look at all my ticker symbols and see that, it dropped by 15% and start getting worried. a lot of my money I've pulled out and put into multifamily deals, and you don't have a ticker symbol.
Mm-hmm.
So the biggest risk is, for the sponsorship group to manage the asset properly and just don't lose the asset.
Mm-hmm.
So even if cash flow goes down for a period of time, if the market slows, just keep making your mortgage payment and be able to hold on through that slow time period.
Awesome. That's some awesome advice. I like the kind of comparing the real estate investors who are in that type of business compared to people who you used to be, were kind of on the outside, that, not aware of these situations, these
Right.
opportunities. And all you have to do is just educate them and say, this is here. Because these investments used to be just for kind of the country club people that someone and you say here, and then that's what people say, the rich get richer, is just kind of they're sharing it. But now,
Right.
kind of with the loosening and the changing of kind of the way you can kind of market and let people know about stuff, it, more people can, be aware of it. So that's awesome.
Absolutely. And there were a bunch of investors too that were like, look, Darin, I would love to be a part of this, but a lot of my money is tied up in IRAs instead of, after tax. And then when I educated them on, you could transfer it from one IRA over to another company where you have a self-directed IRA, then you can invest in these real estate transactions. And they were, a lot of those people had no idea they could do that. And
Mm-hmm.
frankly, I didn't know I could do that until 2 years ago. So, that it's crazy that education doesn't get out there.
Mm-hmm.
So, but I guess that's what we're doing right now.
Exactly. Yeah.
Yeah.
So kind of like moving forward to, because of course you're going to be looking at more deals, you're going to eventually need more capital.
Right.
What is kind of like your, maybe some plans that you're looking to do or already implementing as far as educating new potential investors?
Yeah, so I'm trying to broaden my investor database, and so I do that in a number of different ways. One, I go to local meetups that are focused on multifamily, and so I meet a lot of people through that. I go to conferences that are focused on multifamily, and so they already have an interest in multifamily, but they're not looking to be a lead. They're just looking to meet people who are finding deals, and so I connect with them through that. I also started this year to develop my Instagram page, and um, the reason for doing that was really to give back and serve others, and to reach other people that I would not connect with otherwise. And just to be frank, I mean, that was it was a little uncomfortable for me at first. So I'm an old school business guy that has always done business across the table and speaking eye to eye. And my wife was big on Facebook, and my kids were big on Instagram, but I just pushed back against social media. And I didn't have a Facebook page. I didn't have any kind of social media. I did have LinkedIn for my business, but it wasn't until I joined the multifamily group that I got on the private Facebook page, and I saw the value of quickly interacting with people around the country, and that I couldn't go meet with physically, that we had common interests. And so I saw the value in that. And so I started to grow, my friendships on Facebook. And I've gone, in addition to going to multifamily conferences, I invest in going to entrepreneurial conferences. And I was hearing in these conferences over and over again about the value of Instagram, of being able to connect with other people that you wouldn't connect with before. And this idea that, hey, if people don't know your name and if people don't know you, they can't do business with you. So you need to find a way of getting your name out there. And Instagram is a great platform for doing that. So again, I was old school and didn't really know how to do this, and thought that, this was something for teenagers that my kids were doing. I went to one conference with the goal in mind of meeting somebody that was strong in social media that could help me. And so I was successful. I met somebody, and I took them on as a kind of social media mentor for a little while, to get me started. And one of the things he said was, you got to post every day, and that was uncomfortable for me.
Mm,
And you know, but it's just like any new habit, you know, after you do it for a while, then it starts to become just that. It becomes a habit. So now, I don't know, I've been doing it for maybe a half a year, 6 months or so. Um, and now I don't even think about it. It's like, I brush my teeth, and I have to post, make one post on Instagram every day. It's just something I do. And I'm so thankful that I've done that, because I have people that reach out to me, private message me on Instagram, that I never would have met before. I talked to a guy last night he's in Nevada, and he's wanting to do his first passive deal. And this guy was like one of the most experienced passive guys that hasn't invested yet. He's talked to like 25 operators, and but it's just a pleasure getting a chance to talk to people that want to invest in similar, that have like-minded people. They just don't happen to live in your city.
that is so awesome. Yeah, it's same for me. We're in the same boat. I'm very old school. I'm used to picking up the phone or hopping in the car and meeting people. Especially coming from the old school sales days, because that's all you have is a
Right.
Rolodex, and yeah, that's all you have. So so the
Exactly.
social media stuff, you kind of look at it from a bird's eye view, and it's like, and you're seeing kind of like the cat pictures and this and that. So you're kind of like, oh, that's for kids. How can someone
Right.
actually take this seriously? But they kind of transform into a way that it's kind of like a necessary tool now, because the first thing people do is they look you up. They want to search you. They want to search your history. So that's kind of like the first draw. And Instagram, Facebook, all those platforms is kind of the place you got to do it. And for you, it's been working so successfully, where people's like-minded individuals find you, and you can have a conversation and take it
It,
from it. That's how we found each other. So
right. That's how we found each other. And before we got on the call, like the first time we talked, I was picking your brain about how you started, a
absolutely.
podcast. So
Hmm.
it's like we're all learning from each other, and
Exactly.
that's what I I love that about this community as well. The whole real estate community, and I'm more focused just on the multifamily community, but I find that it's the real estate community in general. Um, People tend to be very open, and tend to want to help the next guy.
Hmm.
So I love that.
Awesome. And so where do you kind of see where your goals taking your business to the future? Are you going to kind of stick in Dallas market or Texas, or you are looking at other markets to expand out?
So for the time being, I'm staying 100% focused on the Dallas market. Um, I just happen to live in a market that's one of the best apartment markets in the country. So why go someplace else? Um, Trying to develop the relationships with the brokers and the community here. Um, you know, if things shift, then maybe I'll change my strategy. But for the time being, I'm really focused on both Dallas and Fort Worth, just this local market. But ideally I'm looking to do is grow the size of the transactions. So, did 76 units. I'm focused now on looking at deals anywhere from 80 to 150 units. After that deal, I'd like to go up to 200 plus units, and then grow from there. Um, and that's another thing that's great about this business, is that it's really it's just your mindset that is the limiting factor. You can go
Hmm.
as far as you want to go, and as fast as you want to go. So I want to go 100, 150, 200, then 3, 4, 5, and then get into portfolio deals. And then after that, you know I still love multifamily, or maybe I want to look at development deals, or get into some deals that I know you're big in the triple net space, or office or retail. um, I don't know, but for the time being, short medium term, I'm 100% focused multifamily.
Beautiful. So for the audience to kind of get a little bit more about you, what's kind of like a typical day for you? And do you have any special morning routines?
Yeah, So Monday mornings, 6 o'clock, I meet with a group of guys for Bible study. And we've been doing that for the last like 2.5 years. And through that, it kind of challenged me on, just reading the Bible. I was really good about it like 10, 15 years ago. And then when I moved to Dallas, I put the Bible in my dresser right next to my bed. And I'd get in my bed and I think, hey, I should read it. And I just would put it off. And so I moved it to my office. And so now I have a new routine that the first thing I do when I go into my office is I read a chapter of the Bible. After that, I will write in a little gratitude journal. And this is a second new habit that I just started probably 3 weeks ago. So it's not completely ingrained, and my wife doesn't even know I'm doing it. But a business book actually prompted me to do it, is to start a gratitude journal about my wife. And so I write little gratitude things about my wife, and then I try to read a business book. So I try to do all those three things before I get into my workday, and because I feel like once you get into the workday, it can go a million different directions, and I most likely won't get back to that. So I also do my post Instagram. So that happens in the morning as well. So that's kind of how I start the morning.
Awesome. That's beautiful. My last question I always ask our guests is, what are you most grateful for?
I'm extremely grateful for the man upstairs. God has blessed me in so many different ways. With different careers, I've made 3 or 4 different career changes, and at times people have said you're crazy, and every one of them has turned out better. And I believe that this multifamily one will fall there as well. Grateful for my family, my wife, my two beautiful kids. I've got one. My son is a freshman in college at Texas A&M, and my daughter is a junior in high school. And I'm grateful for the opportunity to meet new people and develop new relationships and go after new deals. And it's exciting.
Beautiful. Great. Darin, it was awesome speaking with you. How do we get in touch with you?
Number of different ways. You can email me. It's a long one, dbatchelder@tzkproperties.com. And that's spelled DBATCHELDER the word properties.com. You can reach me on Instagram at Batchelder Darin and private message me. I'm also on Facebook, and those are probably the best ways.
Awesome. Darin, it was awesome to speak with you. It was really fun learning about your business and kind of your career and where you're taking your business. Hope the listeners got a lot of insight out of that, and look forward to this getting posted. And was grateful to talk to you, and look forward to connect with you again soon.
Absolutely. I look forward to connecting with you. I appreciate you having me on. And for you listeners out there, I am always open to getting on a call and talking about what you guys are doing, and help out in any way I can.
Awesome. All right, great. Enjoy your day. Take care.
Thanks, Dwaine.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.